and welcome to this episode of the Cold Start Corner. I'm Eric Matei, joined by a very special guest, Darren Jackson, who is the VP of Healthcare Industries Group at Wells Fargo. So Darren's world is the world of business banking, merchant services, and practice financing. And that is the topic that Darren is joining us here on Cold Start Corner to discuss. As in this episode, Darren is going to give all of you a crash course in exactly what you can expect when securing financing for your Cold Start. Darren, hello. Thank you so much for joining us on Cold Start Corner.
Hey, Eric. Thank you. And everyone that's joining today, thank you for listening to us. Two crazy guys. So we appreciate it.
Nice, man. Well, hey, I know we've got a ton of great stuff to get into. So let's go ahead and jump into it. And I thought, Darren, the best place for us to start is let's really start at the ground level and help our viewers understand we're talking about practice financing or securing financing for your Cold Start. What exactly are we referring to?
Yeah, so we're talking about in regards to practice financing for a Cold Start. That's going to be an optometrist that is usually about 1 year, maybe 2 years out from graduating from optometry school. And or that optometrist is a few years out from graduating from optometry school, and they either, one, they go work for a corporate optometry practice, a Target or Walmart, or they go work in the private practice setting for a year, 2 years, so on and so forth. So that's the first thing. The second thing is a doctor that graduates from one of the top optometry schools, and then they wait a year just working, again, in one of those settings as a corporate optometrist or working in a private practice setting, and then they figure out, man, maybe I should start my own practice. So when we say the words Cold Start, we're talking about a doctor that is doing the opposite of buying an existing practice. So warm or hot start would be a doctor that's buying a practice that's already producing revenue. It's been around 5, 10, 20 years, and they're just going to buy the practice. They're going to buy the goodwill of the practice, buy the equipment, and buy, I guess, for lack of a better term, the lease of that practice, if not the commercial real estate. A Cold Start is when a doctor steps out on faith and says, I trust that with what I'm going to do as a doctor, with my family, with my friends, with associates such as Eric, and hopefully me as a banker and a bunch of other folks we'll talk about later in this presentation, that doctor feels that they'll be able to be successful in co-starting a practice that will eventually become a warm practice and then hopefully become a hot practice in the future.
Absolutely. Absolutely. Love it. So, and on that note also, let's make note for our viewers to be aware, if you are looking to purchase a practice, Darren and I are going to be doing another episode of the Cold Start Corner, laser focused on the process of buying a practice. So now that being said, as it pertains to securing financing, Darren, if someone's purchasing a practice, then a lot of that is based on the financials and the valuation of that existing business that they're purchasing. But regarding a Cold Start, we're talking about something where someone is seeking financing for, quite frankly, a business that's little more than a dream or a vision, right? So walk us through what that process looks like for that Cold Start doctor that's ready to leap into practice ownership and Cold Start. What does that process look like for them to connect with a banker, with you and your team? Exactly what will that entail for them to secure their funding?
Yeah, so I'm very lucky and blessed to have been able to work for two of the top organizations in the optometric industry for banking. I've worked for Bank of America, Practice Solutions, and I've been with Wells Fargo Healthcare Industries Group now for going on 6, almost 7 years now. Working in the space of optometry and with other healthcare providers. So a cold startup in regards to applying for the loan, believe it or not, is not as hard as most doctors think it will be. Now, there was a time probably 10 plus years ago, maybe a little bit longer than that, where a doctor leaving optometry school would have to talk to their mom and their dad, talk to their uncles to gather up money to cold start a practice, to buy the equipment, to make sure there were lanes of equipment in the practice, to buy or lease the space for the practice. But over the last 10 years or so, there's a few banks out there, some of the larger banks, that will lend to a cold starting practice owner such as yourself with little to no money down into the practice. So what that means is, again, back to 10 plus years ago, the two avenues of starting a practice in regards to getting financing was your parents, credit cards, and maybe a local bank through their SBA channel, their Small Business Administration channel.
Okay.
And if a doctor had to go SBA, they usually will require a 10% plus, meaning 10%, 20%, 30% equity injection in order for the doctor to get a term loan. A term loan simply means a loan that has a term attached to it. So it has an end date. So term loans in optometric banking is usually up to 10 years. Some banks do a little bit longer. But anyway, so that was 10, 15 years ago. Today, the great news is you as a doctor can walk into a bank or give me a call on the phone. I'll leave my number later. And you can say, hey, Darren, I'm looking to start a practice in Michigan or California or Nevada or Florida where I'm based. And I'll say, doctor, awesome. Congratulations. You're taking a big jump and a big step, but I can lend to you as a representative of Wells Fargo with what we like to call 100% financing. So that means that out of pocket, other than a small fee for the application process, you're going to be able to get a practice loan up to, we want you guys to listen in a little bit further, so I'll tell you how much we can lend. We'll lend up to X amount of dollars on a 10-year loan, and that loan will be out of pocket, $0 for you out of pocket, which again is called 100% financing. So I'll stop there, Eric. I can talk a lot. I hope I answered your question.
No, that's great. As a matter of fact, that is the first really great pearl that I'm so glad you threw out there, right? Because there are so many doctors out there right now that want to start a practice and they think, I don't have money laying around to make a sizable down payment to launch my cold start, but it is awesome to hear. And for our viewers out there, banks are willing to write 100%, 0% down financing for your cold start. So that's awesome. Okay, so the process starts with someone picking up the phone, reaching out to you. Hey, I'd like to do this. It sounds to me like you guys now have some remarkable programs available, and banks are eager to lend to optometrists, right? So that being said, what can that doctor expect to have to show up with, right? Because it's not like you're not just going to take them on their word when they say, hey, can you give me $450,000 to launch my cold start in New Orleans or wherever? So walk us through exactly kind of what they need to expect as far as what they're going to have to bring to the table in meeting with you guys. And also if you could speak a little bit as far as what goes into underwriting. So I know that's another area that a lot of doctors have questions about. So for starters, what are they going to need to have? What documents, tax documents, financials, or otherwise are they going to need when they start this process?
Thank you, Eric. So before I answer the question about what do we need, what do bankers need to get you approved for a practice startup loan, I'm going to say this. So there's a reason why 15, 20 years ago, the banks were not as easily motivated to lend to doctors. I think to answer it from my perspective, it comes down to data. The banks didn't have enough data that proved that the risk of lending $300,000, $400,000 or so to an optometrist that's 2 years out of optometry school, so no prior business ownership, but the doctor walks in and says, I want to get a loan for $200,000 or so dollars. I think the banks 15 plus years ago didn't have the data that proved what we know now. So again, the good news is we lend, bankers like myself, we lend to you, Mr. or Mrs. Optometrist, because we understand that the risk of default, the risk of you not being able to pay your loan back is extremely low. Awesome. It's so low that we're looking at 0.0+% of a default, meaning the practice isn't making any money. There's issues with insurance coverage, issues with bringing in patients, issues with selling and contact lenses, glasses, so on and so forth. So that happens so infrequently that there are a few of the bigger banks out there, such as Wells Fargo, where we'll lend to you, and we're comfortable lending to you because we know that you're going to be successful. We know that
Sure.
you're going to be a winner. All right, so I want to get that out there before I talk about
Awesome.
what we need. So we need about 5 or 6 things. So first thing we need is a confident doctor, a doctor that knows I want to start a practice. I want to contact Eric. I want Eric to help me out with this startup. You're going to need a banker. You're going to need someone like me to help you with the underwriting process of that. You're going to need, commercial real estate broker to find you a space. I bring up the commercial real estate broker on purpose. So in order for me as a banker and my team to provide a loan to you as a startup doctor, you're going to need to have a lease. So I think some bankers aren't telling doctors ahead of time that in order for you to receive the first dollar of that $200,000 approval or $400,000 approval for your practice startup, you'll need to have your lease negotiated and ready to rock and roll. So bottom line is you need to have your dream team, for lack of a better term, of professionals around you, such as the business attorney, the CPA, the commercial real estate broker, the banker, Eric with the consulting side, that can put all these different pieces together during real time. Meaning you can't find a space and talk to a broker and then wait 24 months and then call the banker, because at that point the market might have totally changed. So now rates are higher and or rates are lower. Maybe the occupancy is an issue in the building. Maybe the space was sold to another company, so on and so forth. So all these different things we have to do in regards to the underwriting process as a bank, it happens real time over hopefully a 30 to 45 day period, but sometimes it could be longer. So things that we need in order to get the doctor rock and roll in regards to the approval is we'll need your personal tax returns. Usually we need 2 to 3 years of personal tax returns. We'll need your current work statement or your current statement from your job that you're currently working, your income statement from your job or your work. I'm kind of having a little bit of a brain.
The pay stub. The pay stub? The pay stub.
This is why we're a great team, I tell you. I'm overthinking this thing, guys. So we need your pay stub. We'll need a copy of your resume. We'll need a copy of your driver's license, and we'll need a completed credit application. So that's kind of the long-winded way to answer that question, Eric.
Sure. Excellent. Awesome. Okay. So if we take it from the top, banks are eager to finance optometric cold starts. Number one.
Absolutely.
Number two, not only are banks eager, but banks are willing to write loans for full 100% with zero down for qualified applicants. Now, that said, as far as the process goes, it's important for everyone to remember, as Darren mentioned, got to have the location and the bank, got to have your realtor and your banker kind of brought into the fold at about the same time, right?
Yep.
Because the banker is going to want to see what this lease is going to look like before moving forward with any sort of underwriting. In the context of all that, also, it's also important to note, as you pointed out, that there are a number of moving parts and also a number of different items that the borrower, so viewers, you as the doctor, are going to have to present and be prepared to present to the banker. So that's going to include 2 to 3 years of your tax returns. It's going to include your pay stub. It's going to include the application. You said driver's license. Now, Darren, speak a little bit also the degree to which having a well-constructed business plan inclusive of financial forecasts, when you see times where that can be a huge deciding factor in exactly what the doctor may be underwritten for.
Great question, Eric. So with these type of educational, hopefully down the road there'll be edutainment, right? Hopefully down the road it'll be more entertaining. But these educational conversations that Eric and I have with you doctors, we try to keep things very macro level. If there's any specific questions, of course, you can call me or Eric, and we'll talk more about it for your specific practice. So I'll talk about it from a bank perspective, not necessarily from a Wells Fargo only perspective. We like to see that, the doctor is able to. Eric, I'm sorry, I'm having it's been a long day at work. Throw me that question.
No, man, it's all good. What we're talking about, and really what spurs this question, Darren, is that we know from the work that we have done with our cold start clients, and we've seen the impact that financial forecast and a business plan can have on net financing. So if you can elaborate a little bit as far as why do bankers want to see that? Why can't they just trust some sort of tax documents and the fact that I'm a legal U.S. citizen that's, that's not wanted by the law? What is the importance and role of the business plan and the financial model from a banker standpoint? Why do they want to see this type of stuff?
So the business plan is essential because it's your heart, your mind, your brain, the numbers, your professionalism. It's everything in a 20 to 30 page document that the banks can just take a look at and get a snapshot of what you plan to do in the future. So it's looking ahead because you're a practice owner that's going to start with $0 in revenue. The practice acquisition folks, we look at your tax returns, we look at your 1040s, your 1120s. We look at the past to understand if we can lend now. As a startup practice owner, there's no past data. So we're looking at your projections, your thoughts, for lack of a better term, your swagger on where you think you'll be in the future. So again, back to the macro versus macro conversation.
Sure.
Every bank is a little different. Some banks are going to require that the doctor has a business plan in order to move forward with the loan application. At Wells Fargo, it's not required. We like seeing the business plan, but it's not required at Wells Fargo. So just to give everyone a little understanding, not every bank's the same in regards to business planning, but I personally like to see the business plan, and I personally like to read through the business plan of every doctor that I'm working with.
Awesome. Excellent. Okay. So here we are. If we're kind of moving through the process, right? We know that banks are eager to lend to optometrists to launch cold starts. They're so eager. They're willing to write 100% loans, a $0 down. As far as what that process will entail, again, audience out there, you pick up the phone, you call someone like Darren, say, hey, I'm an optometrist. I want a cold start a practice. And they're going to get you started in the application process. There will be an application. There will be 2 to 3 years of tax returns. There will be pay stub, business plan, and to your point, can be tremendously valuable and really painting a picture from the standpoint that there are no past financials on an existing practice. This is purely a vision. We need to somehow quantify, and you're going to want to see some sort of quantification of what that future may look like. Okay, so
Eric, can I add something real quick?
Absolutely, Darren, please.
Sorry for stealing your thunder. So, Oprah Winfrey famously made up the term vision boards. I think Oprah started that, the vision board. So as you were talking about that, Eric, I never thought of it this way, but the business plan is essentially a vision board. And most successful people, everyone listening to us are extremely successful people. We already do vision boarding. We already write down our thoughts and our prayers, our thoughts on, what's next in the future for us. So the business plan, you can think about it as a vision board that you can hand off to a banker. I try to be a little bit of a banker 2.0. I try to have a great personality and I'm fun, so on and so forth. So that way, again, when I'm looking at your business plan, even though it's in black and white on 20 or so pieces of paper, I feel the energy of the doctor through that vision board, which is again called the business plan. So I highly recommend that every doctor gets it, even if the banker that you're working with or bankers that you're working with, they don't necessarily need it as a part of the approval process.
Absolutely. Love it. I like that. Yeah, I've never really considered that, but you were so right. It is. It's a living, breathing 20 to 30 page vision board with a whole lot of technical math at times.
Absolutely.
So once this cold starting doctor gets you and your team everything you need, help us understand a little bit. And I know you can't speak to all, and well, the fact is, I think our viewers and myself, we'd probably be bored to tears over everything that goes into underwriting. But just share a little bit on what goes on in the underwriting process, and perhaps if there is any sort of additional contributions needed from the borrower, what those might look like. So comment again. You've got everything in your coffers now. Help us understand what goes into underwriting, what we can expect.
So most banks are cash flow lenders. So we have to lend based on the cash flow that is shown through our different documents that we use. Most banks use an Excel template spreadsheet that inputs the amount of debt that you have versus the amount of income you think you're going to bring in to equal a debt service coverage ratio. So a ratio that shows us if the doctor will be solvent, if the doctor will make enough money to support not just the debts of the practice, but their personal debts as well. We like to call it a global cash flow. And if anyone has questions about that, you can give me a call later. We can talk about global cash flow. To save you all the sausage making process and all the boring stuff that no one likes to talk about, my goal as a healthcare business development officer is to work with my partners, which includes the underwriters. So there's partners that we have to mitigate the risk that you'll default by talking about the positives, all the great things that add towards a great global cash flow, right? So you have a strong income coming in from your current practice. You have very little debt. You have savings. You have a 401k plan. Now, a caveat to that is we don't look too much at your 401k plan if a doctor is under, I guess, 55 and a half or so. We look mostly at your revolving accounts, right? Credit card debt. We look at the amount of cash you have in your savings account, checking account. Believe it or not, and Eric, we had a call a few months ago, right? We talked a little bit about student loan debt. So I know one of the biggest, scariest, weirdest things that every single borrower of loans thinks about is, will this $100,000, $200,000, $300,000 in student loan debt, will this hamper my ability to start a practice? And of course, guys and ladies, the practice is the engine that generates the wealth that you will have for the rest of your life, right? The practice is the wealth generator. So most banks that are the bigger banks out there that you probably have an account with, we don't care as much about how much money you have in your student loan debt. We care about, is it being managed? So that's another part of our underwriting process is, let's say that you're currently being deferred. That's fine. We can totally understand that. We can build a model around your deferment to make you understand that we're going to entrust in you as a doctor that worked really hard for your degree and for your living, that we're gonna partner with you at Wells Fargo to become the lender that helps you generate that generational wealth and also help your community of eye disease and issues like that. So again, I'm being all philosophical a little bit, but bottom line is the underwriting process, it usually takes, depends on the bank, but it usually can take between 14 to 30 business days. So understand, doctors, that it's a process that our underwriters have to go through. And people like myself and other members of my team, we're here to sit on your side of the table. We're here to help you. We're here to help the underwriters understand why you should be approved at X dollar amount, whatever it may be, $200,000, $300,000, $400,000 for the startup. We're here to help you to obtain the financing that you'll need for your dreams.
Awesome. So okay, so and by the way, just to be sure that everyone, to remind everyone what Darren just mentioned, if I heard things correctly, it's, hey, if you got student loans, that don't matter. If you got student loans and you're managing those student loans, that doesn't matter.
Right. So again, I'm not a lawyer.
Well, or actually, maybe I shouldn't say maybe I shouldn't say it doesn't matter. But even if you have student loans, that don't let that stop you from seeing if this dream can become a reality, because it may very well, you may still be in a position to secure your funding for your cold start, even with student loans.
And Eric, thank you. I appreciate you bringing that up. That's why it's so important to have a banker, a person that you know on a one-to-one level, a person that's highly recommended, a person that everyone knows or has heard about in the industry over years and years and years, that you can just get on the phone and call. So let's say that the worst situation happens. My team and I start doing the underwriting of your loan. Eric is your consultant, and we have to send out a decline letter. Eric, we can have a whole discussion on approval versus decline letters, right? But A decline letter doesn't mean that you as the doctor are declined. No, no, no. It just means that the way that we wrote up your package, your information, maybe we missed something as the bank. Maybe there's extra income coming in somewhere from another job you have. Maybe you have a family inheritance that you didn't talk about. Maybe your debts were high, but you bought a Ferrari. I don't know. I'm just joking, right? You bought a Ferrari, so your payment was $15,000 a month. You just paid off the last payment. Now you're down to no payment. So we just freed up $15,000 a month in cash flow that can be an add back to help you get that practice loan that you always wanted. So again, I'm joking about this, ladies and gentlemen, but at the end of the day, you want to have a relationship with a banker such as myself that can help walk you through the process, because most doctors that are approved, it's still that same process of kind of going through the underwriting process. I said
Yes.
process like 4 times. Sorry about that. But if
A lot
there
of
is a
processes.
decline, and it happens, declines happen,
Sure.
my team and I, we can mitigate that decline to get you approved. So a decline doesn't mean you're a bad person. You shouldn't have bought that Ferrari. I personally think you shouldn't buy a Ferrari yet, but you can turn a decline into an approval. It happens all the time.
Sure. And by the way, I mean, I'm sure you would allow someone to do the Ferrari if they would allow you to maybe, bring you for a drive here and there. Yeah.
Yes. I'm based in Miami, Florida. I drive a very old car that's been paid off for a long time. And any of my friends that have Ferraris, give me a call.
That's it. That's it. Okay. So I like what you said also regarding shedding a little bit more light into how working with a team can be very valuable, right? Having a banker that you can make a direct phone call to, a text message to, an email to, know they're going to get back with you, but also the fact that that banker has a team surrounding them, the team of underwriters and support in the back that's doing all the hard, I say the hard work, making the sausage, if you will.
Yeah.
So that being said, also before we jump to the next spot, I will say this: you mentioned denials. I suppose it would be cool to say that Akrinos, we are batting 1,000 in that we've never had a client denied for a loan, whether it's for a cold start, what have you. We've never had someone denied based on their situation. So exciting stuff on all fronts. Okay, so moving along then. Going through the underwriting process, you mentioned it will take 14 to 30 business days. So what is that? 3 to 6 weeks to get through underwriting. Okay. So client gets, so one of our audience members, cold start doctor, gets that awesome email that everyone looks forward to. That email that says you're approved. Woo! This is going to be awesome. But it's not just, and I know we've explained this from time to time. If you've applied for a $400,000 loan for your cold start, and you got to proof that $400,000 loan for your cold start, you're not going to see $400,000 in your bank account tomorrow. The process of accessing the funds and the drawdown period, stuff like that, it's different from what we would think when we think of other loans, right? Like we typically think a car loan means what? You get your loan, you drive off the lot, you're making your monthly payment. Get a home loan, it means what? You buy the home, you go to making your monthly payment. But in this world, you've secured that $400,000 for your cold start. Share with our viewers a little bit about how that money is distributed. Explain a little bit explain a little bit about the drawdown period and some of these other things that go into the functioning of accessing the funds.
So, great question. I've been doing this now for 11 years. I've never had that question asked. And I think that question is a game changer question, Eric. And I think at this point in I guess we're talking about 15 minutes now or so, this is when we need doctors to really raise their hand and listen in a little closer, because this is essential. So thank you for that question. So yes, we no longer, I think there was a time, I'm in my 40s, so, probably 40 years ago, 50 years ago. Oh yeah, man. A bank would just say, hey doc, you need $1 million? Boom, $1 million in your account. Or even better, back in the 80s, probably it was just a check for $1 million or something weird. And then they got it wired through their Cayman Island account, or I don't know, Switzerland account or something. So we don't do that anymore. Fraud issues with vendors taking the money and running away, never building the project out. Doctors who, they'll use the money to buy that Ferrari that we talked about a few times now versus going to practice.
Yeah.
So bankers, we can be very, I think we're great people, but we ultimately are in the business of lending, right? And in the business of risk mitigation. So one of the cool things about risk mitigators is that we want to also protect you as the provider. So we'll usually start, and I say we meaning practice finance banks, so B of A, Wells Fargo, so on and so forth. So what we're going to usually do is, doctor, congratulations, you're approved for $400,000 to start a practice in Indiana or in New York City or in Miami, Florida, Wisconsin, so on and so forth. So here are the terms of the approval. Here's your prepayment penalty, so on and so forth. You sign a document, send it back to us. So you got your lease on board. So your lease is done. It's committed to, and everything's good. So that first disbursement or that first draw, from what I've seen over the last 11 years of doing this, is usually about $5,000. Sometimes about between $5,000 to $10,000. It kind of depends on the doctor. But that first disbursement, by the way, you're going to also more than likely be asked by certain banks to open up a checking account, a business checking account. At Wells Fargo, you don't have to open up a business checking account, but it makes things a little bit faster and easier if you do with your startup loan. But anyway, so you'll be able to open up your checking account, and then that first disbursement of $5,000, usually doctors use that to pay back their existing debt from the business attorney. To pay for, the consulting, such as Eric's company, to pay for maybe some contractor they need you to put down a deposit, to pay for equipment deposits, to pay for marketing, to pay for internet access, right? So most doctors during that 14 to 30 business day time period of getting the loan approved, you're incurring a lot of expenses being paid through your credit card or being paid out of pocket. So that initial first draw to open up your loan with my bank, that's going to help you have money that you can use towards paying back your existing debt. Now everyone knows that a term loan has a significant. Well, I can't assume anything. All right, everyone, a term loan is the best type of loan for a practice loan because you have a set amount of payments over X amount of years. And at Wells Fargo, all of our term loans are fixed. So if rates go up, if they go down, doesn't matter. You're fixed at, for example, 4% on a 10-year loan. So you have 120 payments at 4% for 10 years. Simple, done. There are other banks out there that will do an adjustable rate loan, which I don't recommend right now because we're in a rising rate environment. And then some banks, they'll do like a line of credit with business credit card and a loan. I personally think it's best to have as much of your, for example, your $400,000 for that practice that we're going to work on. If you can't have as much of that money as possible in a term loan versus other types of financial vehicles. I'll stop right there. Eric, am I going down the right path?
Absolutely. Yeah. Because again, and I think the key takeaway here is for everyone to understand, when you get that $400,000 for your cold start, you don't just have carte blanche access to $400K, but there is this drawdown period. And something else you pointed out that, from the standpoint that it's going to take 3 to 6 weeks for your deal to get through underwriting. In that 3 to 6 weeks, though, you are going to perhaps be incurring other expenses, right? And whether that's, security deposit on the lease, on the space you're looking to lease, paying for professional services, including, attorneys, accountants, consultants. And by the way, as far as working with those professional services, you can expect that you're going to have to seek from them what is it, Darren? It's the W-9, I believe, is what you want to see from those third parties. I know Akrinos, we've got our signed W-9s, our clients, our cold start clients that are right there with all of our viewers. When they have access to their funds, they take the Akrinos W-9 to get the funds to pay us to help them launch their business, right? Furthermore, in that drawdown period, to understand that those funds are going to be available as you're plugging in the different pieces of your cold start. Some pieces are going to be pretty sizable capital outlays, namely the build out and the equipment, right? And then others, not as large outlays, right? We're talking about maybe just like buying computers and some other technology or furnishings, what have you. So incredible stuff. So on that note, then, as far as the drawdown goes, are you going to have access to these funds forever, or this drawdown is capped over a certain time period that you're supposed to access those funds? Help our viewers understand that.
Great question, Eric. Yeah, so everyone depends on the bank. Wells Fargo, we usually have a period that, so you're already approved, you open up the loan, you usually have a period of time that the build out is going to take place. And then during that time period, you'll pay interest on that money that you're taking out. So you're not going to pay interest on the entire $400,000. You'll pay interest on the $100 here, $1,000 here, $10,000 here, so on and so forth. So again, check with your banker. I would love to earn your business and be your banker, but check with your banker on how each bank that you'll work with has their period during the build out phase. So so that let me answer that question in a very kind of simple macro way, because every bank's a little different.
Sure. Awesome. Okay, so that being said, let's go back to this case study that we're saying we have our cold start, 400,000, right? So we've done all the financials, we've come together and realized, hey, you know what? To build the dream practice in the dream location with the dream equipment to provide the dream scope of care to the community, it's 400,000. They go through the process, get approved, it's awesome, 400,000. We start drawing those funds down through the development phase and the launch phase of the practice. Well, suppose if, when it's all said and done, this borrower only accessed 350,000 of that 400,000. What about that other 50,000 that they were approved for? Are they required to access that, or can that just be relinquished and they'll if they're not accessing it, then how does that work as far as paying interest on that or anything like that?
Yeah, great question. So it depends on the bank. So at Wells Fargo, we could try to convert that $50,000 into a line of credit, maybe a business credit card. Because again, if you're approved for $400,000, I tell all the doctors that I work with, hey, doc, keep the approval at the max amount that you got approved for. Because let's say in a year, let's say you only took 350,000, but in a year you want to get an OCT. If you decline the 400 for only 350, we have to actually do another underwriting process in a year for you to get that OCT, when you should have just kept respectfully, I think doctors should just keep the max amount, because you can just have that money sitting in your account, for lack of a better term. Now, you won't have access to it until you contact your project manager, you contact your loan officer that's going to, give you access to that additional money after the draw period and the build-up period has ended. But the bottom line is, whatever your max amount that you've asked for and you've received, I think it's best to keep all that money available to you versus declining money or saying, I don't, my consultant tells me I only really need 200, but I was approved for 400,000. So let me just get rid of the 200,000. In the future, you're going to need more money, right? Because the businesses take money and need money to make more money. So in my opinion, keep the max amount that you have and work with your team members, including me as your healthcare business development officer. More people that you'll have a part of the team, just to be specific, you'll have your loan expert who works on getting the best interest rate. You'll have your closing officer. Their role is to help collect all the documents that are needed in order for the loan to be approved and go through the closing process. I'm sorry, let me say it this way. Not to be approved, because the approval happens through the underwriting channel. The closing officer, their job is to make sure that after the approval is done, in order for that first $5,000 to be dispersed, their job is to collect all the conditions of approval, to write those off, to make sure that you can get your loan dispersed out to you. And then even after that, you'll have, at most banks, what's called a relationship manager. Their job is to be that banker that works within your DBA, you're doing business as business. So the guys like me and ladies like me that are in the development role, think of us as your cohort consulting, friend that's in the bank that helps you understand who you need to talk to get to where you need to go. But there's other bankers that are within the package that you bought, being a customer or client of the bank now, that's going to come with that loan.
Awesome. Incredible. So wow, man, fascinating. This is a lot, but I tell you, Dan, you've answered so many questions. And I know these are questions that we get, and I will again thank you for working. I know you've taken care of some of our clients, and I know you've consulted with many doctors. So just marvelous insights here. So I suppose as we kind of wrap this all together, again, it sounds to me, Darren, like everything that you're saying is, man, it's such a marvelous time to cold start an optometry practice, and financing is available.
Yep.
It is a process, but man, it's something that anyone can do. Anyone can do it. Go for it. So as far as any closing thoughts as we kind of wrap it up, and any other final words you wanted to leave to our audience here at the Cold Start Corner regarding financing their cold start?
Yeah, Eric, I think I look forward to doing more of these with you because everyone listening to us, we don't have teleprompters, right? We're just two guys talking. We kind of talked about a few questions earlier. We kind of wrote it down, but we're just kind of going off the top of our head, asking questions and answering the questions. So I appreciate, as a viewer of this type of media, I appreciate two people or multiple people talking and just freestyling it versus it being kind of canned. So I appreciate, Eric, the fact that we're able to do this, and I want to do more of this for our clients. Now, to conclude, we got to do more of these because I have.
There's a lot, I know.
Now, right?
Right.
And we're just scratching the surface. So
absolutely.
If we're to get more engagement, Eric, I will say this: I would love in the comment section below, LinkedIn or whatever we're going to put this in the YouTube channel for you guys, that doctors write, what do you want to hear about? Because I've been doing this my whole adult life, it seems, working with optometrists in the practice financing space. Eric's been here doing this forever as well. The more that we know what questions everyone has, we'll answer them, and we'll do videos around it. So I love the interaction. I love your passion around loving optometrists. I share a similar passion to you, Eric, and I thought this was a good discussion. Starting a practice 101, right? We need to have a 201 and a 301 down the road. So thank you.
Amen, man. Amen. Okay, so in closing, if any of our viewers have any urgent questions and they want to connect directly with you, how can folks contact you?
Yeah, I'm Darren Jackson. You can find me on Facebook. I'm also on LinkedIn. Let's see here. My phone number is 571-489-1100. My email address is pretty simple. It's just my first name dot last name at wellsfargo.com. So Darren, DA2RS, dot JACKSON at wellsfargo.com. And Florida-based doctors, if you live in the Miami area, South Florida, you'll see me around on my scooter. It's right off camera right here. So I'm very easy to reach.
Love it. Well, hey, Darren Jackson, thank you so much for joining us here on the Cold Start Corner, talking about how to secure business financing for an optometric cold start. Man, keep doing great things. And to all of our viewers out there, no matter who you are, no matter where you are, and no matter where you are also in planning your cold start, best wishes to you. On behalf of all of us here at Akrinos, I'm Eric Matei signing off for this episode of the Cold Start Corner.
Thanks, Eric.